This unique and amazing indicator on TradingView measures the energy behind price movements in the market. This tool helps you understand whether buying or selling pressure is truly strong, allowing you to make smarter trading decisions. I will also share an amazing trading strategy later in the video. So without wasting any time, let's add this indicator to our trading chart. So I'm in TradingView, and I will be using 4-hour time frame of GBP USD to explain the indicators and a trading strategy later in the video. Now, to add this indicator to your chart, you want to go to TradingView and click on Indicators. Then search for Red K Volume Accelerated Directional Energy. After that, select this one created by Red K Trader. All right, this is the indicator, and as you can see, it has now been added below the chart. Looking at it, you'll notice that we have 3 lines in the form of an oscillator with a center line at 0. This indicator is based on price movement and the associated volume activity to estimate positive and negative energy in the market. Now, what does that actually mean? Well, positive energy represents buying pressure, while negative energy represents selling pressure. As you may know, price movement alone doesn't tell us the full story of what's happening in the market. Volume plays a key role in validating whether price action is strong or weak. If the market moves sharply in one direction, but the volume is low, it suggests a lack of true interest behind the move. On the other hand, if price movement happens with high volume, it shows that buyers or sellers are truly in control, and the move is more likely to sustain. There's also another important scenario: small price movements with high volume. This can happen for 2 reasons. First, it could indicate a balance of power between buyers and sellers, meaning neither side is dominant. Second, it could suggest that large institutional traders are entering positions quietly. This indicator takes all of this into account to give you a clear picture of the market's real energy levels. Now, let's go over its components. Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost. First, we have the blue line, which represents positive energy, in other words, the level of buying interest in the market. Then we have the orange line, which represents negative energy or selling strength. When the blue line is above the orange line, as we can see over here, it means that buying pressure is stronger. But when the orange line is above the blue line, it means that selling pressure is dominant. Now, what makes this indicator even more powerful is that it includes a third line, known as the net energy line. This is the difference between buying and selling strength. When the blue line is above the orange line, the net energy line is above 0, showing strong buying energy. Similarly, when the orange line is above the blue line, the net energy line is below 0, showing strong selling energy. Whenever the blue and orange lines cross, the net energy line changes color. If the blue line crosses above the orange line, the net energy line turns blue, indicating bullish strength. If the orange line crosses above the blue line, the net energy line turns orange, indicating bearish strength. These color changes are key trading signals because they represent a shift in market momentum. However, not every signal is worth trading. Sometimes, momentum shifts happen during pullbacks or in ranging markets, meaning the price may not move enough to make a trade profitable. So how do we filter out bad signals and take only the high probability ones? Well, one way is to trade only in the direction of the overall trend. To do this, let's add another indicator to our trading chart. Click on Indicators. Search for Super Trend. After that, add this one to the trading chart. The Super Trend indicator helps us confirm the market's overall direction. When the super trend is green, it means the market is trending up, and we should only take buy signals. When the super trend is red, it means the market is trending down, and we should only take sell signals. It is this simple, but don't be fooled by the simplicity of this strategy, because I have found it to be very uniquely profitable. Now, let's go over some examples to see how this works. First of all, there is one settings that we need to change. Since there are too many crossovers, we need to change the length to 100. This way, you can see that many false signals are removed. Here, we can see that the super trend is red, meaning the market is in a downtrend. So we will only look for sell signals. Looking at the net energy line, we see that it turns orange over here, indicating a shift in momentum to the downside. Of course, the color changes after the orange line crosses above the blue line. So this is an indication for us to open a sell position. We can open a sell position at the opening of the next candle. The stop loss can be placed above the super trend line. And then you can set the take profit at 1.5 times the risk. Make sure to backtest the strategy before using it in your live trading. As you can see, this trade was profitable. Now let's look at another example. Once again, the super trend is red, so we only take sell signals. The net energy line turns orange, confirming bearish momentum. So we can take another sell position over here. So we can set the stop loss above the super trend line, which would be somewhere around here, and the take profit at 1.5 times the risk. Let's run the trade and see if the take profit will hit. After some time, this trade was also profitable. Now, what about buy trades? Well, we apply the same concept. Here, we can see that the super trend has turned green, meaning we should only look for buy signals. Looking at the net energy line, we see that it turns blue, indicating a shift in momentum to the upside. Of course, here we can see the color changed because the blue line crossed and closed above the orange line. This confirms a buy entry. So we take a buy position over here. You can set the stop loss below the super trend line. And then you can set your take profit at 1.5 times the risk. If you are an experienced trader, you can always use the trailing stop loss and take profit targets. Once again, this trade was profitable. As you can see, this combination is extremely effective, even in ranging markets. During sideways markets, the super trend might switch between red and green multiple times. But this indicator rarely gives signals in these conditions. That means it helps you avoid trading in choppy market conditions, which is a huge advantage. However, it's important to remember that no strategy is 100% perfect. There will still be losing trades, and that's completely normal. The key to long-term profitability is always proper risk management. Alright, that's it for this video. If you found value in this, remember to leave a like and subscribe so you don't miss out on future strategies. Thanks for watching, and I'll see you guys in the next video.